This is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 4th of December. Starting off with the FTSE 100, where supports come in at the 50-day line around 74.70. Disappointing that we haven't pushed through on Friday's strength, but above the 50-day line, looking for the top of that falling trend channel from back in February, which has blighted us for the whole of 2023, or almost all of 2023. Above the top of that channel there, 76.50, best case would be 7,800 by the end of the year. On the downside, it looks as though 7,400 support pretty well entrenched. Moving along to the DAX, and here no such problems. What a contrast between the DAX and the FTSE. Broadening triangle target there, 16,800. We're looking for that by the end of the month, especially while we're above the old gap there around 16,200, the gap down there at the beginning of August. RSI very overbought at 79, but these things in a strong trend as we're seeing at the moment, backed by a rising 50 and 200-day moving average pattern, suggests that 16,800 should follow relatively easily. On to the Dow, and here we'll see if the Fed chair's comments at the end of the week will upset this market, but we've got a couple of targets here. First is 36,600, which is a resistance line projection from January. Best case by the end of the year up to 37,500, and that Red March resistance line projection. 50 and 200-day lines both rising in parallel, and upside value while we hold above the 35,800 level, which was the old July-August resistance and the previous high for the year. Moving along to the star market at the moment, and even though we didn't quite get to 43,000 by the end of November, which is what I was looking for when we were at the beginning of November, we are not far off that. The target line there, one from basically the end of last year, which is still there from October, and that's heading towards 44,000, which hopefully we'll get early this month, and after that then we can dream of what was previously resistance on the way down between 48 and 52,000, and that could happen as soon as the end of January or even sooner, the way things are going. We had the unfilled gap to the upside, rising 50 and 200-day lines, and that mid-move consolidation between 36 and 3,800 looks as though it could have plenty more steam in it over the near term. Gold apparently has hit an all-time high, which did hit an all-time high, which was closing high, which was towards the 2070 area. It was a spike back in May, but the current situation is that the longer we stay above the 2060 area and maybe allow down to as low as 2030, the greater the chance of a move up to 2180 as soon as the end of next month. That's a resistance line projection from back in June. The 50 and 200-day lines both rising at the moment, probably a day or two away from a golden cross, which is obviously very appropriate and poetic as far as gold is concerned. Moving along to the stocks, and starting off with Argo blockchain, which is rather low than it was the last time the Bitcoin price was where it is now, but here we've got an unfilled gap to the upside above a rising 50-day line. That suggests that not only will we get up to the top of that rising trend channel from back in June at 12 pence, but we could actually fill the gap up to 13 and a quarter pence from July as soon as the end of this month or even sooner. But gaps off the low, normally decent signs or signals for stocks and markets. We're revisiting Cornerstone, which has gapped up off the floor of that rising trend channel from the beginning of the year. So around the 11.5 pence level, above 11.5 pence, we're looking for an 18 pence by the end of this month, which would retest the September resistance zone. So looking pretty set fair for Cornerstone at the moment. RNS from Deltex Medical Group today, which I didn't cover actually. I was nearly going to, but didn't quite make it. Here it's interesting that we've had a gap off the low and above the rising 50-day moving average at 0.16. Above that, we're looking for the shares to head to the bottom of the August gap down at 0.32 or 0.33 as soon as the end of this month. So maybe Deltex finally back on track. A stock which has been on track for most of the year now has been Empire Metals, and here we've got a nice little bull flag situation. Looks as though it's actually limbering up for a new leg to the upside. We've already got that prepared with that June resistance line projection heading towards 15 pence, and we're looking for that as soon as the end of this month, the longer we stay above the 10 pence zone. GCM Resources is next, and here we bounced off what was our previous target there, around 1.5 pence. Above that, we're looking for 2.5 pence well before the end of this month. If we get through 2.5 pence, we've got the prize of as high as 3.9 pence by the end of next month, but obviously it's a bit early days yet, and we're still waiting for that 50-day line to start curling up, even though, as we said, this does look like a decent setup. On to Hummingbird, which is finally feeling the benefits of the gold price. A little bull flag breakout there. We've got the 50 and 200-day moving averages both rising above that 200-day line at 11.75, looking for a minimum of 16 pence by the end of this month. And I suppose by the end of this month we'll be close to a golden cross, which is obviously very nice for a gold-based stock. Onto a stock which I haven't looked at for a while, and it is Ondo, and here you can see that we've bounced off the 200-day moving average around 20.5 pence. I'd like to stay above that on an end-of-day close basis ahead of a potential retest of the low 30s by the end of this month. If you're cautious, you wait for an end-of-day close through the 50-day line at 23.5 pence before assuming the low 30s are on their way, and would also wait for a break above the neutral 50 level. This stage only well below 18, and recent support for the shares really upsetting the ongoing build for that stock. One of the highlights or lowlights of last week was, or the last month actually, was the fall in Petrofac, and today's RNS with a new director coming on board steadied the ship a little bit, but if you look closely, we've got to break recent resistance on the way down, the high on Friday around 23 pence. So an end-of-day close above 23 pence really needed to give us the chance of a move back up towards the low 30s as a dead cat bounce on that situation. Obviously, we don't want any further new lows below 15 pence in the meantime. Gap off the lows is a signal for Panther Metals, and its bear trap gap reversal. From below the old March support there at 2.65, above 2.65, looking for the 200-day line initially, 3.3 pence, and then up to 4.2 pence at the top of that broadening triangle from March as soon as the end of next month. Bullish divergence as well, so you could argue that Panther at the moment has all the right technical credentials. A stock which has had plenty of technical credentials over the year has been Plexus, and here unfilled gap to the upside started the rally back in the end of August, and here we've had what is now interestingly a gap fill rebound, so filling that gap down from 22 pence at the end of last month. Above 22, we're looking for a retest of the September resistance at 30 pence, hopefully by the end of this month. With the crypto revival, anything with blockchain in the name is doing rather better than it has been, and here we've got quantum blockchain gapping through, or gapping towards that resistance line there around 2.1 pence. We want to see an end-of-day close above 2.1 pence in that line there from October to give us a retest of 2.9 pence by the end of this month. If you look closely as well, you can see that we've actually had a golden cross between the 50 and 200-day moving averages at the end of last week, so maybe that explains the gap higher that we've had today. On to Quadrise, which I've covered many times in the recent past, and had to adjust the targets many times in the recent past. The last target, I think, was adjusted over the weekend or the end of last week at 3 pence, and it's very nice to see that we've actually hit that almost on the nose. 3.07 pence the high of the day. The 3 pence still on the cards while we're above the previous target around 2.3 pence on an end of day close basis. We've got the 50 and 200-day moving averages both rising. We had an unfilled gap to the upside last month, so it looks as though this rally here will still have legs up to 3 pence and beyond the next level up to 6 pence from 2021. Punter's favourite, or it was the punter's favourite earlier in the autumn, is Upland Resources, and here we've had a V-shaped bull flag breakout, so breaking out through that 3.1 pence resistance from the end of last month. The longer we stay above that, the greater the chance of a move to 3.75 pence, which I've been promising for quite some time. That's the top of the gap down that we had from back in October. After 3.75 pence, hopefully we can just keep going towards the highs that we had back in that month. Finishing off with Wishbone, and here company keeping on delivering decent fundamentals in terms of the RNSs as such as we had today. Just trying to see whether the shares can actually finally get off the recent range of 1.7 to around 3 pence. Bear trap gap reversal, a mini one anyway today, and the longer we stay above 1.7 pence, the greater the chance at least of a move back to the 200-day moving average at 2.25 pence over the next few sessions. Best case is 3 pence again by the end of this month. That's it from me today. More updates tomorrow.